If you increase the liquidity by 10%, the gold will go up 10%, but Bitcoin will go up 40%. So now we have the Fed on our side. We have money printing. We know that as the Fed's pushing, right, Bitcoin's going 4x on that. We should hit around 1 million in terms of Bitcoin price.
Krueger emphasizes that Bitcoin is highly sensitive to liquidity changes, far more so than traditional assets like gold. In fact, Bitcoin reacts 4 times more to liquidity than gold does. For example, a 10% increase in liquidity might cause gold to rise by 10%, but Bitcoin could see a 40% increase in value. This strong correlation between Bitcoin and liquidity is particularly important in understanding its price movements over time. From 2022 to 2024, liquidity fell by about 10%, driven by tightening policies from the Federal Reserve. The initial drop in liquidity caused a significant price crash in Bitcoin during 2022. Krueger highlights that this drop wasn't primarily driven by fear or sentiment, but by the Federal Reserve's tightening of interest rates. Now, with the Federal Reserve shifting back toward money printing and liquidity expansion, Bitcoin is poised for another upward trend, potentially seeing a 4-fold increase as liquidity rises.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
If you increase the liquidity by 10%, the gold will go up 10%, but Bitcoin will go up 40%. So Bitcoin reacts is extremely sensitive to liquidity. And we saw that there was a fall in liquidity, about a 20% fall, a 10% fall in liquidity from 2022 to 2024. And, the first phase of that caused a real drop in Bitcoin in 2022. And so, that was probably more liquidity driven than halving driven. It was really driven by the liquidity, the Federal Reserve tightening interest rates. So now we have the Fed on our side. We have money printing. We know that as the Fed's pushing, right, Bitcoin's going 4x on that. So that's the liquidity side. Now we have the power law side, completely separate. The power law is really much more of a story of adoption. So we have this new technology, Bitcoin, which is about 1% global adoption right now. So 1% of the world uses Bitcoin as kind of their main savings vehicle right now. I'm one of them. I hope you are as well. If you have been using Bitcoin as your savings vehicle, you've been doing very well recently. So that 1% is growing, right, by roughly the time since the Bitcoin was invented in the Genesis block in 2009 till now, right? So it's been growing for 15 years. And the power law says that as it's growing, as that time since the Genesis block has happened, it's growing at roughly 5.7 power of that time, right? So it's growing at a very high rate, at a rate that is faster than an exponential rate of money supply growth. So money supply growth is growing at 10%. Bitcoin's growing at currently at about 45% compounded annual growth rate, right? So 4 times faster than the money supply is growing. And it's growing that way because adoption is growing, and we're having adoption into this finite resource, and because according to Metcalfe's law, it's becoming more useful. There's more people buying into this new money paradigm. And the result of all this is that we have this very, very high growth in Bitcoin price, but it's a high growth with high volatility, right? Now, really hard to understand, to see any rhyme or reason in this volatility when you look at it in just regular space, or only if you look at the price in log space. You really need to look at the price and time since Genesis block in log space, so log space. And then you can measure volatility and you see it's 0.3, which is actually very high, but not so high in log space, right? So, and it's actually dampening a little bit. So if you add in the liquidity model and the power law model, and then we also take into account sort of historically the halvening cycle, right, which was very significant in the first two bull markets of Bitcoin, right? In 2013, when the market, when the halvening happened, and these halvenings were very, very significant. They made an enormous amount of difference in terms of supply. Today, not so much, right? We've mined 95% of all Bitcoin, and the halvenings will matter for the miners, but they won't matter so much for Bitcoin holders because, you know, we're mining right now 450 Bitcoin a day. BlackRock just bought 2,400 Bitcoin, BlackRock and Fidelity and the other ETF provider, but they bought 2,400 Bitcoin yesterday, right? So between Michael Saylor, the ETFs, this is not a question of who's going to buy this extra mining supply. That it's just no longer relevant, and that's just a bad model to have in your head, that there's this finite little amount of new Bitcoin that is, and you know, if that thing drops, it's going to make an enormous difference. It really won't, because if we're mining 450 Bitcoin a day right now, if we drop to 225, which we will next halving, it's not going to make that much difference. Those 200 Bitcoin a day are not going to make a world mountain of difference. So there will not be a supply shock.
Krueger believes that liquidity cycles will continue to play a key role in Bitcoin's price action. Just as liquidity contractions caused the 2022 downturn, future expansions in liquidity, driven by global monetary policies, could propel Bitcoin to new heights. While halving events may lose their significance, liquidity cycles are expected to remain a fundamental force in Bitcoin's price trajectory. Krueger asserts that Bitcoin follows a model with an R-squared value of 95%, meaning the model is highly accurate in predicting Bitcoin's price movements based on liquidity and adoption trends. While there is still some uncertainty in the model, Krueger is confident in its ability to predict Bitcoin's future price.
There may be a liquidity shock worldwide, and there probably will be in 5 years, because we'll probably go through another liquidity cycle, because we always tend to do that. And so, you know, I think liquidity cycles will continue. Halvening cycles will probably not, if I had to guess. And of course, we have this power law of adoption, etc. So put all these things together, we now have a very consistent model of Bitcoin. We have a model with an R-squared of 95%. We have a great understanding of liquidity cycles. We have a great understanding of why Bitcoin is growing. We have models of adoption. It's an interesting model because at some point, the Bitcoin price sort of exceeds, in a power law, it sort of exceeds all the value of all resources on Earth. Now, it may still do that, or it may sort of kind of create nests right now. But we are in the early stages where it's the Weibel S-curve is essentially a power law, and will be for the next 2 decades. So we also have this timeline in this. What does this model predict? Because models that don't predict anything are useless, right? So, you know, general relativity, famously predicted Eddington's experiment with the bending of light around the sun, could be measured, verified general relativity. Now, what does the power law predict? Well, power law predicts that 10 years from now, more or less, we should hit around 1 million in terms of Bitcoin price. Now, we could hit 3 million, right? We could undershoot it by only going to 500,000, but it's very unlikely that 10 years from now we're going to be at 100,000 Bitcoin. It's also pretty unlikely that we're going to be at 10 million Bitcoin. So it gives us a good range of Bitcoin. It tells us a little bit how long we have to go to possible hyper-bitcoinization. And that number tends to be 20 years. So a lot of this stuff is a predictive model. And I think it's a great model. I think there's still stuff that we don't know about the model. It's great that a lot of people are really digging into the statistics and the math and the economics, because I think this is a great area of study, and I think it's something that I'm glad to at least be part of a little bit, even if it's just bringing it to light and shedding this out and spreading this to the world.
Krueger compares the predictive power of Bitcoin's model to scientific theories like general relativity, which accurately predicted observable phenomena. In Bitcoin's case, the power law model suggests that within 10 years, Bitcoin's price could range anywhere between $500,000 and $3 million. Although these predictions are not precise, the model indicates that Bitcoin will likely be worth at least $1 million per coin within the next decade. Krueger points out that Bitcoin's adoption curve follows the Weibull distribution, a mathematical model used to describe the diffusion of new technologies. According to this model, Bitcoin's adoption will continue to grow exponentially over the next 2 decades before reaching a saturation point. This aligns with the theory of hyper-bitcoinization, where Bitcoin could become the dominant global currency.
Please like and subscribe my channel.